Welcome to Momentum Monday. Today's Monday for a change. June 14, 2021.
And back in paradise, Ivan. You still look like you're in,
How is life?
somehow, even when you're in the nicest place on earth, looks like Bulgaria in the background. It always looks like you're one step away from communism, no matter how nice a place you live in.
Well, California is pretty much there anyway, so. Right?
I'm telling you, man, I don't understand how people aren't living in San Diego. I don't taxes, schmaxes. It's fantastic.
Oh, I agree. That's why I'm still here and you're not. So
I'm here enough. I'm here just enough to avoid the taxes. So, look at I got even my California shirt on. So, I'm going to the U.S. Open.
Yeah.
U.S. Open at Torrey Pines. I'll probably be wearing U.S. Open hats for about a year. Oh, I just did like a 2.5 hour ride. Let's do this. All-time highs, I think, for the NASDAQ 100, Ivan.
Yes, all-time highs. Definitely rotation into tech in the past week or so, and out of the so-called old economy stocks. We're talking financials, basic materials, real estate. So for most of the first half of the year, the market was kind of worried about inflation.
Yeah, rates. I think it's very correlated to rates maybe right now.
Yeah.
Even though it's not big moves in the rates, when rates stop going up, tech comes back.
Exactly. That's one of the reasons, probably the main reason. So definitely rates pulled back a little bit in the past week or so, which helped tech. The other reason behind the recent resurgence of tech might be that the market is thinking that going back to normal might not happen as quickly and as evenly as it's currently priced in many stocks, because many of the travel stocks, vacation, leisure stocks are already trading above their 2019 levels. So it's inflation, but also it might be that what I just mentioned. But either way, definitely rotation into tech in the past week. Software has been really strong. Also, IGV, the software ETF, is almost backing all-time highs.
Yeah, I mean, that's basically my portfolio, e-commerce and software. So you can see how the year just wasn't a good year for me so far, but it's starting in the last few weeks, led by Shopify.
Yeah, Shopify, big breakout today.
It's not that it's a big breakout. It's that this company continues to be underowned. Go back and pull up a monthly. So you can see that that's a massive it's just been a monthly parabolic move, and very few companies, including Amazon, have been able to pull that off over this long a period. So again, go back to the monthly. Amazon never pulled that off without a crash, right? Amazon had many 90%, 2 or 3 90% pullbacks as a public company, and this company's now been public for 6 years and has had a few 40 to 50% pullbacks. But one of them came during the market crash.
You had a big one here at the very beginning in 2015, 2016. Was like
very young company, and that gave you your one chance when I was buying it at 100 on the breakout above that, and 40 and 50 and 60. I think this company, I think the biggest news of the day is when companies that I hadn't heard of, and it's a genius company, Figs. I wrote about it on my blog. If we look at Figs, which is Lululemon for hospital wear. Basically took a FIGS, Ivan. If we look at Figs, which is a $5 billion company that no one's ever heard of, selling hospital medical garments, but fashion forward medical garments to a massive industry at the end of through a pandemic, built on top of Shopify. So here's a company that will be around for the next 50 years selling direct-to-consumer garments built on top of a product. So if we go look, for example, Ivan, I'm trying to explain this to people that just think it's overvalued, and go look at Simon Properties Group. Imagine Simon Property Group where the cost to Simon Property of owning the malls was zero, SPG.
Yeah.
So Shopify is basically the modern Simon Property Group. They are the mall of the world, right? And of course, there's high churn at one end, but companies like Figs and Allbirds and all the companies that are built on top of Shopify, that'll be brands in the coming thousands of DTC brands, whether it's Manscaped, paying their landlord Shopify, and Shopify having 90% gross margins with no leverage. It just feels like this company will be a multi-trillion-dollar business over the next 20 years, and you can buy it today. It's never going to be cheap. It exploded in a pandemic. I think people thought malls would come back. Simon Properties had a run, and I really feel that unless Shopify, I don't know how it gets disrupted. And to digest that gain the way it has and now perk up at the end of the pandemic, I feel that this is going to have a big run. I think Amazon's perking up too. Obviously, Microsoft, the FANG stocks are doing great.
I mean, with the QQQ at all-time highs, obviously, we'll see those.
Yeah. Good point. Good point. So anyway, so are the banks holding up like Goldman, those weasels?
No, as I said, all the economy stocks are right now pulling back. They're digesting their gains from earlier in the year. If you take a look at if you compare the S&P 500 to let's say the Nasdaq 100, you will notice that right around mid-February, tech basically went into digestion modes. Just basically started trading in a big range. And right around that time, February, right here, the S&P and the Dow Jones, they basically picked up the slack and they started to outperform. It was right around that time the market starting to worry about inflation. So the big narrative in the market was inflation. So all those basic materials, we have oil and copper and steel, they became the new momentum stocks for a few months. And now in the past week or so, we're seeing a reversal of that thesis. Maybe the market is realizing that it has over discounted the inflation threat, or as I said, there might be another reason. But definitely tech has been leading for the past 10 days. Semiconductors finally broke out today, SMH. I mean, it's still building a base, but definitely starting to show some relative strength. Relative strength rating starting to rise. So definitely another tech sector that is looking good. So yeah, it's been all about software and semiconductors for the past 10 days, mostly software.
No, but even biotech, now the tech comes in. Like, look at this.
Yeah, biotech as well. Bounced, big bounce.
I think this is a big story, Ivan, and I think everybody should listen to the All In podcast of Biogen. Pull up BIIB, because there's two ways to look at this. I'm not an expert, but I'm slowly becoming interested because people are starting to teach me in English. This is a really interesting breakout on what people are saying is a fake drug, Alzheimer's drug. So pull up the monthly, and we can see the breakout. And I think this is significant for two reasons. Let's call them the lucky sperm club for many reasons. Okay, there hadn't been a drug approved in 17 years for Alzheimer's. It affects, I don't know, I forget the number. It's like 15% of the population, right, with dementia. Okay, this is a drug that the FDA just approved. 3 people quit. 3 FDA people quit over the decision. Okay, so we can tell now. It's again, I'm not going to regurgitate. Everybody should go listen to Dave Friedberg, All In podcast with Chamath and David Sachs. But he's the guy who got Chamath into biotech, who's now doing tons of SPACs. And Chamath is way better at memorizing and regurgitating stuff than me, but they did a really good explanation, good and bad, of this FDA approval. And it's very easy for the media to jump on this and say, how could they be approved a $50,000 drug, which really isn't effective? The thing is, and it's really interesting with the FDA, could be doing, if you listen to the podcast, and the woman that approved a previous drug, is she just opened Pandora's box to say, listen, like Moderna and these protein vaccines, it doesn't have any downside. It may not have upside, but it doesn't have any downside. And so by approving this drug, again, this is the bullish case, forgetting the fact that we're socializing these costs and people's healthcare costs are going to go up, that's a whole nother problem, I agree. But if you look at this breakout on what is a drug that's iffy, okay, the FDA is saying we need innovation on this on these drugs, and they've now put a target and $100 billion in market cap for people to chase and to people to come up with better solutions. And so, you know, there's two ways to look at this, and it's pretty interesting how these protein, again, I just really fascinating discussion on this All In podcast that kind of was eye-opening. So biotech is another one where semiconductors and technology and data and running fast software and algorithms and testing matters a lot more than just the science. So tech, I think what we're seeing with QQQ is breaking out, and you know how I feel, QQQ over SPY and then DeFi over QQQ. If we go look at the high yield, Charlie was telling me that junk bonds have the lowest yield of all time. Okay, junk, meaning you can get 4% for buying junk, because you have to go that far out on the risk spectrum, and I don't know, buy IB. I don't know what's considered junk anymore, but it can't be good if it's called junk. Okay, so if you want to go buy junk bonds, you're going to get 4%. Now, this whole 60-40 portfolio and this whole idea of, you know, bonds being a buffer during bad times, I'm not going to throw that out the window. There's probably a lot of truth to that. But at the same time, people are wondering why DeFi and AMC and GME and all these nonsense, Dogecoin, combined with great companies, remember, you can't expect youngins, youths, to buy junk bonds. They'd better off trading with no commission, you know, farting around in meme stocks than putting their 40% in stuff that has, you know, 30% downside and 4% upside. You know, the math doesn't work in bonds. Software's coming for the bond market. That's what DeFi proves. And there's just trillions of dollars in bonds, which is much bigger than the stock market, going to be looking for a home in the next 40 years. So this is just one of those like rats through the python or whatever, you know, when you see open their mouths and swallow this thing. The bond market is being eaten. And I think it's machines. People are going to pay machines to yield. And everybody wants to be in the AWS business and own a piece of these machines. And that's where DeFi comes in. And that's where all these, you know, risky bets are coming in. And one thing I read today about options is even though people have been newbies are being grinded out of the market, you know, after that big boom, the amount of activity in the options market, it continues to accelerate. And I see this on StockTwits, even though there's been a pullback of 20% in users and active user growth, the amount of messages continues to go up. So the people that are surviving are hooked, right? The people that got on this treadmill and on the flywheel of learning to invest, we've notched up 3 levels. And so we've solved a big problem of creating liquidity as the boomers, you know, come to the end of their investing cycle. So this is all like kind of bullish, and I think the markets are digesting this. And so it's really a fascinating moment to take those gains from COVID that we came out of the crash and digest them and push higher here. I don't think anybody had this on their play card. And so I don't know, I think there's a lot of people that have just been trying to bet against this market and see pullbacks, and now they're running to cover. So there's just a lot of fuel out here. And
yeah, definitely quite a few underinvested managers. And as the Nasdaq is breaking out to new all-time highs, maybe we will see some chasing. And
But there's a lot of good stuff. Look at Activision, great gaming company, ready to break out again. This is one of the great gaming companies of all
it's
time.
looking good. Yeah, the Take-Two, the Activision, the EA, they're all
Look at
stepped up.
eBay. It's a boring old economy. I mean, eBay. Yeah, look at EA. But I look at eBay and I'm like, oh my goodness. And it pulled back again today. It just can't get through. I'd look at one of my favorites, GoDaddy, which is just kind of, a toll road to domains, and it's, ready to go. So there's some great bases out there. So I don't know.
Yeah, definitely. It's not just tech. There's some good setups in biotech. We had some of those stocks had big volume breakouts. Wait a minute, which one was this one? I'm trying to show. Never mind. I'll show you another one. Look, the big volume breakout, they adjusted the gains sideways, and now it's starting to move back higher. This is a bullish behavior. So there've been quite a few of those smaller cap to mid cap biotechs that they've been acting constructively lately.
And what's really fun, Ivan, and I know it's Joe, if you're not using StockTwits trending, forgetting if you want to communicate and use it, if you're not just simply going to the trending page or figuring out how to use Reddit, you're literally, and that's a retail game. Retail in 99 died out really fast. Retail in 2019, 20 is exploding further. And so the game is flipped, right? And so if you're not watching the message boards and the social networks and at least learning how to read this data, you're literally behind. And there's so many people leaving the hedge fund industry for the private markets to do a little bit of everything, jujitsu. I mean, it's really exciting. And even Warren Buffett, who was shitting all over Bitcoin, made a huge investment in a Brazilian bank that's like a clearing bank for crypto. So everybody, they're not in Stone, it was some other Brazilian bank, but Stone and Pags look great. Brazil looks great. These are all in my portfolio. Brazil looks great. I think The Economist had a cover story with the death of Brazil, and look at that, So the headlines are wrong. Money continues to flow into e-commerce. If you want to fart around in value stocks, you've had a great run. Congratulations. The people that are playing the rotation game are eking out a little extra gains. But for those that haven't been fancy all year and kind of been biding time, this could be a run could be setting up. But it's not as broad based. I'll have to say, it's not just like buy one thing and they all go up. It's kind of fun to see there's some stock picking art to this.
So that's something good, because if everything is rising every day, then we're closer to a top. So
I think it's great. I think it's great pin action. Anything else you're looking at, or is it just a good market for swings?
Well, those are the three main sectors that I mentioned. The so-called new economy stocks right now are outperforming. So software, semis, biotech, rotation into the new economy stocks, while the old economy stocks are now digesting gains. From a big picture perspective, that's what's going on right now, which is good for growth investors, good for swing traders.
I'm trying to think if there's anything else that we've missed. Brazil, junk bonds we talked about, the fact that momentum stocks were just
It'll be interesting to see if China also wakes up, since it's been underperforming significantly this year. Basically, the China tech CQQ is basically flat for the year, and it's kind of going sideways the past few weeks. So it'll be interesting to see if they can break out.
I just think in a good market, why even bother with China? Like, the thing is, they'll catch up eventually because they'll get pissed that they're trailing U.S. stock. The only way to play China is like, okay, China gets upset when they're not in the news, and so they'll let their stocks run again. But I mean, it's just too much manipulation with the CEOs, and the communists seem to be messing with the CEOs of their big companies there. So I don't know why you need the headache. I own a few. I always own Bubba and Tencent. Future, that looks really interesting. They're kind of like the Robinhood
Yeah, Tiger in future, yeah.
Those are going to have to be on your list. I wonder how Noah's doing, which is kind of a wealth manager of China, NOAH. So it seems like the new generation is more about trading there. Noah's more Schwabi, and Futu and Tiger are more like trading. And so those seem to be doing better. Okay, listen, we could beat a dead horse. Like I said, GoDaddy, eBay, Shopify. You've got Amazon Basic. I'm trying to look through my positions here and just see what else looks interesting. Roblox pulling back. Maybe that's interesting on a pullback. I'm trying to think what
Maybe
else.
the payment stocks like PayPal and Square starting to wake up, just building big bases.
Yeah, digesting huge gains on huge market caps. Yeah. I'm trying to see if there's anything else that looks interesting here. Sorry, but I'm just scrolling down through my list. No, I think we've covered it. I've covered at least some of the names that I'm following.
Yeah.
Farfetch looks interesting too, of all the Chinese stocks. You know, it kind of got sold off with that guy who blew himself up. And this is the luxury kind of Shopify meets retailer, very high-end brands. I think this will surprise a lot of people over the next 5-10 years. Digested, that was kind of more a liquidity. Yeah, the Revolve is one that you really liked technically, and it's had a great move. All right, listen, we'll be back next week. Ivan, have a great week. We'll see you. When are we running on the beach? When is it?
Wednesday.
All right, buddy.
All right. Bye.